Thank you all for being part of this stimulating conversation. Up next, here to shed light on the future of stablecoins, allow me to introduce Dr. Mattia Rattaggi. He is the Senior Advisor at Edelcoin AG, and as an advisor, board member, and a startups developer in the Digital Finance and Web3 space, advising and carrying out projects at both private companies and regulatory bodies. Everyone, put your hands together in a warm round of applause, welcoming Dr. Mattia.
Good afternoon, ladies and gentlemen. Welcome to this session about the future of stablecoins. Within this session, I will also represent a new coin, a stablecoin, Edelcoin, which we brought to market in July. And hopefully after the talk, you will appreciate the innovative character of this new coin. So let's begin. I can say that stablecoin have a problem, and I will tell you why. First of all, we have to understand that stablecoin are really essential to crypto markets and also behind. I mean, I don't have to tell you that if you look up right now on CoinMarketCap, you will see that amongst the 12 top cryptocurrencies, they make up 75% of the capitalization of the cryptocurrency market. You have actually 3 stablecoins. From a market cap point of view, you have Bitcoin, Ethereum, and then stablecoin Tether. At place 6, you have stablecoin USDC, and place 12, you have DAI. All these are pegged to the US dollar. But the significance of the stablecoins for crypto markets come out even better if you analyze the volumes. If you look at the 30 days volume on CoinMarketCap, you will see that stablecoin Tether is actually number 1 with a volume of 30 days, basically the double of Bitcoin. And even USDC, who is 7 times smaller than Ethereum in market cap makes up more than 2/3 of the volume of on 30 days than what Ethereum makes. So the stablecoin are here, and therefore why they are so important? Well, for 2 reasons. Actually, if you want to trade on cryptocurrencies, you will see that you have to rely a lot on stablecoins. Because to go in and out from non-baked cryptocurrencies, you better park your money on stablecoins for a while. Moreover, only a very, very little tiny fraction of cryptocurrency can be accessed directly from the fiat world. So, first point, they are really essential because they are the blood of the cryptocurrency ecosystem. And their importance goes also behind the cryptocurrency. There are many applications today growing in importance that facilitates the payments cross-border, fiat to fiat, between regulated entities by going through a stablecoin. So the stablecoins are therefore essential for the crypto markets and behind, and that's why they are so prominent in any market cap table. But so far, the history of stablecoins has been tainted by problems. From time to time, even scandals. The oldest one, Tether, is with us nearly 10 years. And since it has been with us, it has been tainted by problems regarding the availability of the reserve, reluctance from the Tether company to show actually and disclose those reserves. And the same has happened also for the other stablecoins. I even don't mention the scandals of stablecoins not pegged to anything like Terra Luna. You all know the story. Therefore, the stablecoins really deserves to be enhanced because they are so key to the cryptocurrency market and behind. So first of all, it's also interesting to be clear about what is the stability of stablecoins. I come from Switzerland. I've been active in Switzerland in the cryptocurrency ecosystem for over 7 years now. And I like what the Swiss FINMA, the Swiss regulator, have said already in 2019, sorry. It has mentioned in his regulation about cryptocurrency that stable is primarily a marketing term. Yeah. So instead of talking indiscriminately about stable coins, I prefer to say the stable coins are payment tokens, but with more or less a strong stabilization mechanism. And I will tell more about this. First of all, let's look a bit in depth and at the fundamental level, so in a simple level but fundamental level, about the fiat-based stablecoins. You will agree with me that you give $100, yeah, for 100 USDC or USDT with the belief that you can get any time, or the expectation that you can get any time this $100 back. Now, what is less said is that by holding $100 in USDC or USDT, first of all, you incur an inflation risk, the loss of purchasing power of this fiat, which I admit is equally there when you hold the real fiat. But when you hold a stable coin backed by fiat, you also run an investment risk. Simply because the provider of that stable coin will invest your $100 that you have handed over to get the stable coin. So you have an investment risk. You also have a redeemability issue potentially, because if you feel that these $100 are badly invested or put at risk, you will actually begin to go and run and ask for your $100 back. You might remember in March, early this year, when the rumor circulated that a small part, 4% I think, of the reserves of USDC were invested in Silicon Valley Bank. And Silicon Valley Bank was having a lot of problems, supposedly leading to the liquidation, and therefore you have experienced a run on the USDC, causing the USDC to lose the peg to the dollar, which is fundamental. This is when the investment risk of the company issuing the stablecoin impact the redeemability and may cause you to lose the money. For the sake of completeness, we also have to say that if you come in to the USDC or USDT from another currency than the US dollar, like would be my case, I obviously run a risk, a forex risk given by the exchange rate between US dollar and Swiss francs in my case. Now, another family of stablecoins is actually backed by metal and not by fiat. This is the case for Edelcoin, EDLC. Again, we can think it through in more or less the same way. You would give $100 to the Edelcoin and you will receive a quantity of metals equal to $100. And of course you wait, you expect to be able to get this $100 back anytime, right? But let's look at the risk, inflation risk. In a stable coin backed by fiat, you run the same risk as fiat, which is the loss of purchasing power, which has been a constant for the fiat money, true for the dollar, let alone for the inflationary currency like in Turkey or in Argentina. But in the case of a stable coin backed by rare precious metals, it can also be that you actually have a hedge, because the development of the value of these metals in dollar terms may actually appreciate. Therefore, the inflation risk is probably less or can be well hedged by a stable coin backed by metals, which are rare and precious. Investment risk. Remember, $100 to buy USDC. USDC put your $100 in Silicon Valley Bank. Silicon Valley Bank is badly managed. You lose the $100. If you buy a metal-based stablecoin such as Edelcoin, you actually run zero investment risk. simply because you don't have to provide the metals to get your stablecoin. The metals are already there. They have just been tokenized. They are there in a safe, untouchable, and independently priced, independently guaranteed, and therefore the investment risk is really nil. This impacts the redeemability as well, because not running an investment risk is much unlikely that you generate a run on a coin such as the Edelcoin. Of course, the forex risk is the same as before. Also, there is another feature that makes Edelcoin amongst the family of metal-baked stablecoin very special. It is that it is actually baked by 5 different precious rare metal that I will describe after. This guarantees to you a potential positive portfolio effect, because the price of the individual metals may actually go in different direction, and the net effect is that they smooth the volatility. After having seen how important is the reserves for both the fiat case and the metal-based case of stablecoins, we have to look a bit more in depth about this, because this is really what makes a difference. The stablecoin and the value of it depends on the reserves. In the case of stablecoin baked by metals like Edelcoin, the reserves pre-exist the minting of the coin. I stress this point: you don't have to bring the reserves on the basis of which you get the stablecoin. The reserves are already there. This means, as I mentioned before, that they are not invested. The reserve is not invested, and therefore is not put at risk in the same way as a fiat-based stablecoin is at risk, or put the reserves at risk. Also, in the case of Edelcoin, we have taken the precaution to overly back it by 25%. The reserves behind the Edelcoin is 125% the pair. Of course, the reserves is fully disclosed, independently priced, which it should not, but still now it makes a difference compared to the stablecoin baked by fiat, because as we know, the disclosure is not where it should be. The other characteristic of a stablecoin like Edelcoin is that by acquiring one of these coins, you became owner of the underlying metals, of the underlying reserve. Now let's play this quickly through for the fiat-based stablecoins. The reserves pre-exist? No, it doesn't pre-exist. You have to bring it. The reserve is not invested? No, it is invested. And therefore, you run an investment risk. Does it exceed, the reserve exceed the quantity of stablecoins? I'm not aware. Actually, there are doubts that the coverage is 100%. Does the reserve is fully disclosed, audited, and available everywhere? Well, right now, yes, but in the past it has not been the case. And the industry needed to request that for this to happen. So, another aspect of the Edelcoin is that, again, it has got a portfolio effect because it incorporates 5 different metals. And these metals are copper isotope, especially 2 types of copper isotope, which are used in applications such as medicine and biochemistry. Nickel wires, also here 2 types, which are extensively used in electronic, aerospace, and energy industry. And then cesium-133, primarily used in atomic clocks and telecommunication. So this is to say that the metals making up the Edelcoin are in high demand now, and I hope going forward, given the industry in which they are used. And they are also rare. You don't find them around the corner. There is also another important feature that I want to mention here. By bringing to the market the Edelcoin, we have make liquid and affordable in monetary and financial terms metals that otherwise you could only buy in kind, only in kind. Now you can buy an Edelcoin and have them in your portfolio. Here I come to the final slide of my talk. So what is the future of stablecoin with all this background that I have mentioned? Remember my opening. I think the stablecoins respond to an economic need for the function they have on the blockchain, but also behind it. And therefore they are here to stay and to prosper. They are not going away. What I also think is that the stable coins in the future, they will coexist at the very least with CBDCs, which are very much pushed by central banks around the globe. And they will also coexist or have to coexist with tokenized deposits, which are beginning to be proposed. Tokenized deposits is basically tokenizing the deposit you have in the commercial banks. So the back will be important, but it will be still fiat, right? Also, it is clear that any offerer of stable coins, let alone of all the cryptocurrencies, because we have seen also the panel before, will have to comply to strong regulations. So bank-like regulatory requirements are just around the corner, as you know from pronouncements from the Financial Stability Board, the G20, the BIS, and then all the major national authorities. Is it good or bad? I think it's good. It's very good. Because as soon as something gets used in the society, you have risks that materializes for the users. So until cryptocurrencies were used by a minority, little small part of people, the population, the regulators, rightly so, didn't pay too much attention. But their mission is to protect the investors, to protect the consumers, and to protect the system. So it is actually good news that the regulators are looking at it and proposing regulation, because it means that these cryptocurrencies are becoming more and more important. And we certainly want to bring to the market cryptocurrencies that are safe for the users and for the system. And we have built the Edelcoin accordingly. Now, given that we have around 200 stable coins right now, amongst the 9,500 cryptocurrency according to CoinMarketCap, there will be a survival of the fittest, or will this be? I think so. So, which coin is going to last longer and succeed and prosper? I think that there are 2 or 3 criteria important for this to happen. One is that if a stable coin, has less inflation risk than possible, it has a better chance, I think, to survive than a stable coin that is just as inflationary as any fiat. We have seen that the metal-based coins, like Edelcoin, is going to offer an interesting hedge here and probably be less inflationary than fiat-based stable coins. Then I think that the stable coin that will survive, or the stable coins that will survive, are going to be the one that propose or expose you to a smaller investment risk than possible. We have seen that the stable coin based by fiat, they put you at risk because your money is invested. And by the way, you don't get anything in return, which, parenthesis, in a macroeconomic environment when the interest rates are 0 negative, it's okay. But now things are changing and the interest rates are becoming positive. So why should I give money to a stablecoin issuer that gives me back the same money in cryptocurrency terms, i.e. a stablecoin, but keep all the investment for itself? So investment risk we have seen with stablecoin that results from a tokenization of metals, it's nil. I'm talking about the financial risk, of course. Operational risk, we know that bad things can happen everywhere. If you have a low investment risk, I already mentioned that the run risk is likely to be low as well. So this is another advantage. So maybe we will see in 10 years, 15 years, 20 years, what kind of stable coins are around. I dare to think that the stable coins that will be around will be the one that protect you against inflation risk attached to fiat and protect your money when you give it in order to get the stable coin back. But we are not in 2014. In 2014, an intelligent person or a group of persons brought to the market Tether. It was very nice. It was the first one, and we needed it in order to facilitate the trading of cryptocurrencies. Now we are not there. We are 10 years later. There are 200 stable coins out there, and as I mentioned, close to 10,000 cryptocurrencies. Bringing to market today a stable coin means facing a big challenge in getting adoption of this stable coin. This is where our effort as Edelcoin are now being put, facilitating the adoption and triggering the adoption of it.